Hey everyone, we've got the full text of the new $900 billion coronavirus relief bill, which was released earlier today. And I've got to say that there are some great things in here for businesses, some of which honestly were surprises. So you're going to want to get comfortable and listen very closely here. The bill is massive. It's over 5,500 pages in total. So I focus my read on the Paycheck Protection Program, EIDL grants and loans, favorable tax updates, stimulus checks, and unemployment insurance. This is not to say that the rest of the bill is unimportant, but much of it is not directly relevant or time sensitive to our audience of individual and business taxpayers. Anyway, we now unequivocally know the following is in the bill, which honestly I would expect to be passed by the Senate and the House by the time that you watch this video. Number one, $284 billion is going to PPP Round 2. Businesses will be eligible for this loan if they experienced a 25% decline in gross receipts during any calendar quarter in 2020 compared to the same quarter in 2019. This is lower than the 30% threshold that had been floated in other proposals. The maximum amount of the loan will be $2 million. And this one is big. Any entity that has an NAICS code starting with 72, which includes hotels and restaurants, will be able to receive a round 2 PPP loan of 3.5 times monthly payroll as opposed to the 2.5x all other businesses get. And the program could go live as soon as the first week of January. Also, 501c6 organizations, aka business associations, will now be eligible to apply. Number two, expenses paid for by PPP1 and PPP2 will be deductible. This is huge, as the IRS had previously doubled down on their position to not allow this. Further, the members or shareholders' basis in the stock of their company will not be reduced on account of the non-taxability of the funds. Number three, businesses that receive PPP loans less than $150,000 will simply need to sign a one-page form for automatic loan forgiveness stating that they complied with the requirements of the program. No need to fill out a long-form application or provide supporting documentation. And this will also be true of those receiving funds under round 2 of the PPP. Number 4, a new round of EIDL grants and loans. This time around, the EIDL programs will be reserved for live venue operators, independent movie theaters, cultural institutions, and other hard-hit businesses in low-income communities. The grants will still max out at $10,000 per business, and the loans will carry the same terms as before. Number 5, businesses that received an EIDL emergency grant will not have to deduct that amount from their PPP loan forgiveness. I repeat, PPP loan forgiveness will not be reduced by the amount of the EIDL emergency grant received. And this will also hold true for any round 2 EIDL emergency grants and round 2 PPP loans. Number 6, the employee retention tax credit would be extended through July 1st, 2021. Additionally, the refundable payroll tax credit is increased from a maximum of $5,000 per employee to $14,000, which would be calculated as 70% of wages paid up to $20,000 for any quarter. And this is important. Businesses will now be able to utilize this credit and take a PPP loan. Previously, you had to choose between one or the other. Number 7, a slew of favorable tax changes. The child tax credit and the earned income tax credit will be able to be claimed by taxpayers using 2019 income if their income dropped enough in 2020 that it would otherwise reduce the amount of these credits. And the above the line charitable contribution deduction has been extended through 2021 at $600 for married filing joint taxpayers and $300 for other taxpayers. Flexible savings accounts can be rolled over from 2020 to 2021, and 2021 balances can be rolled into 2022, so they won't lose the value of the unused FSA balance as they normally would. Next, anyone who opted into deferring their payroll taxes under President Trump's executive order now have until December 31st, 2021 to repay those deferred taxes. And those hungry for deductions will be happy to hear that business meals will be 100% deductible for 2021 and 22. Paid sick and family leave payroll tax credits that were made available under the FFCRA are extended through March 2021. Number 8, various tax extenders have been, extended. These are all favorable to the taxpayer, which is why they were set to expire and needed to be extended by Congress, which they were. Number 9, stimulus checks will be $600 per person. This would include you and your spouse and your dependent children, but not any adult dependents, including adult children that wouldn't otherwise qualify for the child tax credit. In other words, the $600 is going to apply to each of the parents and their children who are under age 17. The amount of children, however, is unlimited. So the Duggars, who you may remember from 19 Kids and Counting, are going to be counting some serious stimulus checks. The qualifying income limits are the exact same as last time. So if your situation changed in 2020 such that you'd be otherwise eligible for stimulus checks, you'll be able to receive this benefit in the form of a rebate recovery when you file your 2020 tax return this spring. Also, keep in mind that you won't have to repay stimulus checks if your income would have otherwise disqualified you once you file your tax return. And for those receiving stimulus checks, Treasury Secretary Steven Mnuchin is stating that the first payments could hit people's bank accounts by as early as next week. Number 10, enhanced unemployment insurance of $300 a week for 11 weeks until March 14th. Alongside this is an extension of the total amount of time that the unemployed may claim benefits through state and federal programs to 50 weeks. If you have both wages and self-employment income, but your basic unemployment benefits does not take into account your self-employment income, you'll actually be able to get an additional $100 a week for a total of $400 per week. Number 11, rental assistance to those who make less than 80% of the median income in their area, have at least one person in their household who has lost a job, and can demonstrate they are at risk of losing their home. So there you have it, folks. Remember that there are a ton of issues here that will have to be clarified by the SBA, the Treasury, the IRS, and so on. And to that end, we'll be updating you with the need-to-know updates and clarification as it unfolds, and we won't waste your time with the minutia. Anyway, enjoy the holidays and tell someone you love that, well, you love them. Bye for now.